Hello and welcome. Over the next couple of hours, we're going to embark on a journey together. A journey designed to demystify one of the most common, yet often complex, tasks for millions of Americans: preparing and filing your taxes. In today's digital age, the pen and paper method of tax preparation has largely been replaced by a more efficient, accurate, and user-friendly alternative: tax preparation software. But with so many options available, each boasting a long list of features.
Disclaimer: this video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.
How do you know which one is right for you? How do you cut through the marketing noise to find the tools that will truly make a difference in your personal financial landscape? This series is designed to be your guide. We will explore the top 5 features in tax prep software for the US market. These are the core functionalities that can transform your tax filing experience from a stressful obligation into a streamlined and even empowering process. Whether you're a first-time filer, a seasoned pro, or someone with a complex financial situation, understanding these key features will equip you with the knowledge to select the software that best fits your unique needs. Our goal here is not to tell you which specific software to buy, but rather to illuminate the powerful features you should be looking for, no matter which brand you're considering. Before we dive into the specifics of our top 5 features in the upcoming chapters, it's important to set the stage. Why has tax software become so indispensable for the modern American taxpayer? The answer lies in the ever-evolving landscape of our nation's tax code. The Internal Revenue Code is thousands of pages long, and it's constantly being updated with new credits, deductions, and regulations. For the average person, keeping up with these changes is simply not feasible. This is where high-quality tax software steps in. It acts as your digital navigator, guiding you through the intricate maze of tax laws with a level of precision and up-to-date knowledge that would be nearly impossible to achieve on your own. Think of it this way. Would you try to navigate a cross-country road trip without a GPS? You could, but the chances of taking a wrong turn, getting lost, or missing out on a more efficient route are significantly higher. Tax software is the GPS for your financial journey. It helps you stay on the right path, avoid costly errors, and ensure you're taking advantage of every opportunity to which you are legally entitled. Now let's briefly touch upon a crucial aspect of this discussion. When we talk about health, financial, investment, tax, or legal topics in the United States, there are important regulations to be mindful of. This audio series is for informational and educational purposes only. It is not intended to be a substitute for professional advice from a qualified financial advisor, certified public accountant, or tax attorney. The information we will be discussing is general in nature and may not be applicable to your specific circumstances. We will be exploring the features of tax software, not providing personalized financial or legal counsel. We strongly encourage you to consult with a licensed professional for advice tailored to your individual situation. Our aim is to empower you with knowledge about the tools available, so you can have more informed conversations with your financial advisors and make confident decisions. So, what are these top 5 features that we'll be dissecting in the chapters to come? Let's take a high-level look. First on our list is guided navigation and a user-friendly interface. We'll explore why a clean, intuitive design and a step-by-step, interview-style process are no longer just nice-to-haves, but essential components of modern tax software. A great user experience can significantly reduce the stress and anxiety often associated with tax time, making the process more accessible to everyone, regardless of their financial literacy. Next, we'll delve into the world of comprehensive form and schedule support. The complexity of your tax return is determined by your life events and financial activities throughout the year. From the standard Form 1040 to more specialized forms for freelance income, investment gains, or educational expenses, the right software needs to have you covered. We'll discuss the importance of having a wide range of federal and state forms available. Our third topic will be maximizing deductions and credits. This is a feature that can have a direct and significant impact on your financial outcome. We'll examine how sophisticated tax software uses a systematic approach to uncover potential tax-saving opportunities you might have otherwise missed. It's not about finding loopholes, it's about ensuring you receive all the benefits that the tax code provides. Then, we will turn our attention to accuracy guarantees and audit support. In the world of taxes, accuracy is paramount. Even a small error can lead to penalties and interest. We'll discuss what an accuracy guarantee really means, and how different levels of audit support can provide an invaluable safety net and peace of mind. Finally, we'll wrap up our top 5 with a look at seamless integration and data import capabilities. In our increasingly connected financial lives, the ability to securely and automatically import information from your employer, bank, and investment accounts is a game changer. This feature not only saves a tremendous amount of time, but also dramatically reduces the risk of manual data entry errors. Throughout this series, our focus will remain on you, the user. Each chapter is designed to be a standalone resource, but when listened to in sequence, they will provide a comprehensive and holistic understanding of what to look for in tax preparation software. We'll be using clear, easy-to-understand language, avoiding jargon wherever possible. Our goal is to make this complex topic accessible and engaging. So get ready to enhance your understanding and build your confidence. In our next chapter, we will begin our deep dive with the foundational element of any great tax software: guided navigation and a user-friendly interface. We'll explore how the design and flow of a program can make all the difference in your tax preparation journey. Thank you for joining me, and I look forward to guiding you through this informative series. Welcome back. In our last chapter, we set the stage, outlining the 5 critical features we'll be exploring in this series. Today, we dive into the very first, and arguably one of the most important, of those features: guided navigation and a user-friendly interface. Now, this might sound a bit technical, but the core idea is simple. How does the software look, feel, and guide you through the process? A great interface is like a friendly, knowledgeable guide sitting beside you, turning a mountain of complex forms and confusing jargon into a series of simple, manageable steps. Let's start by breaking down what we mean by a user-friendly interface. In the context of tax software, this isn't just about modern-looking fonts or pleasant colors. It's about clarity, simplicity, and intuitive design. When you first log in, you shouldn't feel overwhelmed. A well-designed program presents a clean dashboard, clearly outlining the major sections of your tax return: personal information, income, deductions, credits, and so on. It should be immediately obvious where you need to go and what you need to do next. The goal is to eliminate guesswork. You shouldn't have to hunt for the right form or wonder if you've missed a crucial section. The software's layout should naturally lead you from start to finish. The most effective way modern tax software achieves this is through what we call guided navigation, often in an interview-style format. Instead of presenting you with a blank tax form, like a Form 1040, and expecting you to know where to put every number, the software asks you a series of plain language questions. Think about it. A question like, "Did you earn income from a job where you received a W-2?" is infinitely more approachable than trying to find line 1A on a tax form. This interview-style approach does a few remarkable things. First, it breaks down the monolithic task of doing your taxes into small, bite-sized pieces. You only have to focus on one question at a time. Did you have children? Did you contribute to an IRA? Did you pay student loan interest? Answering these simple yes or no questions allows the software to do the heavy lifting in the background. Based on your answers, it automatically selects the correct forms and schedules, and places your information in the appropriate fields. You don't need to know the difference between a Schedule A and a Schedule C. You just need to know the facts about your own life for the past year. Second, this guided process is educational without being overwhelming. As you answer questions, many top-tier software programs provide helpful explainers and learn more links. If you're unsure what counts as a charitable donation or who qualifies as a dependent, a small pop-up or sidebar can give you a concise, easy-to-understand definition based on IRS guidelines. This helps you make informed decisions and builds your financial literacy over time. It transforms the process from a passive data entry task into an interactive experience. Let's consider an example. Imagine you're a freelance graphic designer. In the paper and pen world, you would need to know that you have to file a Schedule C, profit or loss from business. You'd have to figure out how to calculate your gross receipts, track down all your business expenses, like software subscriptions, home office costs, and marketing materials, and categorize them correctly. With guided navigation, the software would simply ask, "Did you have any self-employment or freelance income?" When you say yes, it opens up a new line of questioning specifically for that topic. It will ask about your income, and then it will present you with common expense categories for freelancers. It might ask, "Did you have advertising costs? Or did you use your personal car for business?" This proactive prompting ensures you don't overlook common deductions that you are entitled to claim. Furthermore, a great user interface helps prevent errors. It can flag inconsistencies in your data entry. For example, if you accidentally type an extra zero in an income field, making it 10 times larger than what was reported on your imported W-2, the software might prompt you to double-check the number. It also handles all the mathematical calculations for you. Arithmetic errors are one of the most common mistakes on manually filed tax returns. By automating the math, the software eliminates this entire category of potential problems, leading to a more accurate return. The visual design plays a key role in this as well. Many programs now use progress trackers, showing you exactly where you are in the process and how much you have left to complete. Seeing that you're 60% done can be a great motivator. They also often provide a real-time, constantly updated estimate of your tax refund or amount owed. Seeing this number change as you enter new information can help you understand the direct impact of different deductions and credits, which is a powerful feedback mechanism. Before we conclude this chapter, let's revisit our special condition. The information presented here is about the functionality and design of software. It is not tax advice. The purpose of a user-friendly interface is to help you accurately input your own financial data and navigate tax-related topics. The software, based on your input, applies the standard tax rules. The feature itself is a tool for organization and clarity. It does not replace the judgment of a qualified human professional for complex situations. So to summarize, when you are evaluating tax preparation software, do not underestimate the power of a clean, intuitive, and guided experience. This feature is the foundation upon which all others are built. It reduces stress, saves time, prevents common errors, and can even help you learn more about your own financial life. A great interface ensures that the power of the complex software engine is accessible and usable for the average person. In our next chapter, we will build upon this foundation and explore our second key feature: comprehensive form and schedule support. We'll discuss why having access to a wide array of federal and state forms is crucial, especially as your financial life evolves. Thank you for listening. Hello and welcome back to our series on the top features of tax preparation software. In our previous chapter, we explored the importance of a guided and user-friendly interface, establishing how a great design can make the tax filing process more manageable and less intimidating. Today, we build directly on that foundation as we delve into our second key feature: comprehensive form and schedule support. At its core, a tax return is a collection of forms and schedules that tell the story of your financial life over the past year. While many people may only need to file the standard Form 1040, life events and different income streams often require additional paperwork to be filed with the IRS. This is where the breadth and depth of a software's form library become absolutely critical. Having comprehensive support means the software is equipped to handle your unique financial situation, not just today, but also as your life changes and evolves. Let's start with the basics. The Form 1040 is the main U.S. individual income tax return. However, attached to it are various schedules, which are additional forms used to report specific types of income, deductions, or credits. For instance, if you have investment income, such as capital gains from selling stocks, you'll likely need to file a Schedule D. If you earn freelance or contracting income, a Schedule C, for profit or loss from a business, is typically required. If you have rental income, that's often reported on a Schedule E. A top-tier tax software program will have a vast, integrated library of these federal forms and schedules. The beauty of the guided navigation we discussed in Chapter 2 is that you often don't even need to know the names of these forms. You simply answer the questions about your life. Did you sell any stocks or other investments? Or did you earn income from a side job? And the software automatically generates and fills out the correct forms in the background. It removes the burden of you needing to be a tax form expert. But why is a comprehensive library so important? Because life is rarely simple. Consider a few common scenarios. A recent college graduate might need a form to deduct the student loan interest they've paid. A family with a child in college might need to file a form to claim an education credit. A homeowner will need to report mortgage interest and property taxes, which are detailed on a Schedule A for itemized deductions. Someone who made significant charitable contributions will also use that same schedule. The right software handles all of these situations seamlessly. It has the necessary forms ready and integrates them directly into your main return. This capability becomes even more crucial when dealing with less common, but still important, financial events. For example, if you received income from a partnership or an S corporation, you'd get a form called a Schedule K1. If you had to take a distribution from a health savings account, or HSA, there's a specific form for that. Quality software won't be stumped by these situations. It will recognize the need for these forms based on your answers and prompt you for the required information. Without this built-in support, you could find yourself halfway through your tax prep only to hit a wall, realizing the software you chose can't handle your specific needs. Furthermore, comprehensive support isn't just about federal taxes. For most Americans, there is also the matter of a state tax return. This is a non-negotiable feature for any worthwhile tax software package. An excellent program will not only offer the forms for your specific state, but will also integrate the two processes. A huge amount of the information on your federal return, like your adjusted gross income, or AGI, is the starting point for your state return. Good software will automatically carry that information over, saving you the redundant and error-prone task of entering everything twice. This integration is especially important if you have a multi-state tax situation. This can happen if you moved from one state to another during the year, or if you live in one state but work in another. These scenarios can be particularly complex, often requiring you to file part-year resident or non-resident returns. High-quality tax software is designed to handle these complexities, guiding you through the process of allocating your income correctly between the states to ensure you are filing accurately. Let's bring this back to our special condition for a moment. Discussing the existence of forms like Schedule C for business income or Schedule D for capital gains is for informational purposes. We are describing what these forms are used for in general terms and highlighting the software's ability to support them. This is not advice on how you should classify your income or what you are eligible to report. The software is a tool that populates these forms based on the data you provide. The responsibility for the accuracy and completeness of that data always rests with the taxpayer. In summary, when you're choosing a tax preparation program, think of its form library as its vocabulary. A program with a limited vocabulary can only tell simple stories. A program with a comprehensive form library can tell a rich, detailed, and accurate story of your unique financial year. This feature ensures the software can grow with you, from your first job to buying a home, starting a side business, making investments, and planning for retirement. It provides the peace of mind that no matter what comes your way, your chosen tool will be up to the task. In our next chapter, we will move on to one of the most anticipated topics: maximizing deductions and credits. We'll explore how the software actively works to find potential tax-saving opportunities for you. Thank you for tuning in. Hello and welcome back. So far in our journey, we've discussed the importance of a great user interface and the necessity of comprehensive form support. These features create the foundation for an accurate and manageable tax filing experience. Now, we arrive at a topic that many people are keenly interested in: maximizing deductions and credits. This is a feature that directly showcases the power of tax software, transforming it from a simple data entry tool into an active assistant that works to produce a more favorable outcome for you, all within the established rules of the tax code. First, it's essential to understand the basic difference between a tax deduction and a tax credit, as they work in distinct ways. A tax deduction is an amount of money that you can subtract from your total income, which is also known as your adjusted gross income, or AGI. By lowering your income, you lower the amount of tax you have to pay. For example, if you are in a 22% tax bracket, a $1,000 deduction could save you around $220 in taxes. Common examples of deductions include contributions to a traditional IRA, student loan interest, and certain self-employment expenses. A tax credit, on the other hand, is generally more powerful. A credit is a dollar-for-dollar reduction of the actual tax you owe. If you owe $1,500 in taxes, and you are eligible for a $1,000 tax credit, your tax bill is directly reduced to just $500. Some credits are even refundable, which means if the credit is larger than the tax you owe, you can get the difference back as a refund. The child tax credit and the earned income tax credit are well-known examples. So, how does tax software help you maximize these? It's not about finding secret loopholes. It's about thoroughness and systematic investigation. High-quality tax software is programmed with the entire, up-to-date federal and state tax code. It functions like a massive, interactive checklist. Through the guided, interview-style process we discussed in Chapter 2, the software asks you targeted questions about your life, your family, and your expenses throughout the year. Your answers to these questions are the keys that unlock potential deductions and credits. For instance, the software will ask about your family. Do you have children? Do you support another relative? Did you pay for childcare so you could work? Your answers trigger the software to check your eligibility for things like the child tax credit or the credit for other dependents. It will ask about your education expenses. Did you, your spouse, or a dependent pay for college tuition or fees? This line of questioning explores your eligibility for education credits like the American Opportunity Tax Credit or the Lifetime Learning Credit. The software's search for deductions and credits is exhaustive in a way that would be difficult for an individual to replicate. It will ask about events you might not even realize have tax implications. Did you make energy-efficient home improvements? Did you contribute to a retirement savings account? Did you have significant medical expenses? Did you donate to a qualified charity? Each yes answer prompts the software to dig deeper, asking for the specific amounts and details it needs to see if you qualify, and to fill out the necessary forms. One of the most valuable functions in this area is how the software handles the standard deduction versus itemized deductions. Every taxpayer gets a standard deduction, which is a fixed dollar amount that you can subtract from your income. However, if your individual deductible expenses, like mortgage interest, state and local taxes, and charitable donations, add up to more than the standard deduction, you can choose to itemize them instead. Top-tier software does this comparison for you automatically. As you enter your expenses, it keeps a running total of your itemized deductions. At the end, it will compare that total to your standard deduction and recommend whichever option results in a lower tax bill. It takes the guesswork out of one of the most fundamental tax filing decisions. Let's pause to address our special condition. The information we are discussing is about the process and capability of the software. We are providing general examples of widely known credits and deductions for illustrative purposes only. This is not advice. The software doesn't know if you are truly eligible for a deduction or credit. It only knows how to check for potential eligibility based on the numbers and answers you provide. The final responsibility for claiming only those deductions and credits to which you are legally entitled rests with you, the taxpayer. You should always ensure you have the proper documentation to support any claim you make. In essence, the maximization feature is an automated discovery process. It scours the tax code on your behalf based on your life's details. It ensures that opportunities are not missed simply because you were unaware a particular credit or deduction existed. For individuals with complex financial lives, such as small business owners, this becomes even more valuable, as the software will prompt for dozens of potential business-related expenses. In summary, this feature is one of the primary reasons people turn to tax software. It provides a systematic, comprehensive review of your financial picture to identify potential tax-saving opportunities that are legally available to you. It does the heavy lifting of knowing the tax code, so you can focus on providing accurate information about your own life. In our next chapter, we will explore a feature that provides crucial peace of mind: accuracy guarantees and audit support. We'll look at what these guarantees actually cover and how they can protect you after you've filed. Thank you for listening. Hello and welcome. In our last chapter, we explored how tax software helps identify deductions and credits. After you've entered all your information and the software has worked to optimize your outcome, you arrive at the final step: filing your return. It's at this moment that a new set of concerns may arise. What if there's a mistake? What happens if the IRS has questions later? This brings us to our fourth key feature: accuracy guarantees and audit support. These features are designed to provide a crucial layer of confidence and peace of mind after your return has been sent. Let's first break down what an accuracy guarantee typically means. Nearly all reputable tax software companies offer some version of this. In its most common form, it is a guarantee on the software's calculations. The company is essentially stating that its software will perform all the mathematical computations correctly based on the information you provide and the tax laws for that year. If you are assessed a penalty or interest by the IRS or a state tax agency specifically because of a calculation error made by the software, the company will typically reimburse you for that penalty and interest. Now, it is absolutely critical to understand the limitations of this guarantee. It is not a guarantee that your tax return is correct overall. It is a guarantee against software calculation errors. It does not cover penalties or interest that result from user error. For example, if you accidentally entered an incorrect number from your W-2, forgot to report some income, or claimed a deduction you weren't actually entitled to, the accuracy guarantee would not apply. The guarantee covers the software's math, not the accuracy of the data you entered into it. This is an important distinction. The software trusts that the numbers you provide are accurate and complete. Some companies may also offer a maximum refund guarantee. This is a marketing promise stating that if you use their software and then use a competitor's product with the identical information and get a larger refund or smaller tax liability, they will refund the purchase price of their software. This is primarily a competitive feature to assure you that their program is just as thorough as others on the market. Next, let's talk about audit support. The word audit can be intimidating for anyone. While the odds of being audited are statistically low for the average taxpayer, they are not zero. An audit is simply a review by the IRS or a state agency to verify that the information on your tax return is accurate and complies with the law. Audit support from tax software companies comes in several different tiers, and it's important to understand what you're getting. The most basic level of support, which is often included with the software purchase, is audit guidance. This means that if you receive a notice from the IRS, the company will provide you with information and resources to help you understand what the notice means and what steps you need to take to respond. They might offer a Q&A library, checklists, or access to articles explaining the process. However, they will not speak to the IRS on your behalf. You are still responsible for managing all the correspondence and interactions yourself. A higher level of support, which is often sold as an add-on service, is commonly called audit defense or audit representation. This is a much more comprehensive service. If you purchase this and receive a notice, you can turn the matter over to a team of tax professionals, often enrolled agents or CPAs, who are employed by or partnered with the software company. These professionals will review the IRS notice, help you gather the necessary documentation, and will communicate directly with the tax authority on your behalf. They essentially represent you during the audit process. This can significantly reduce the stress and time commitment required from you. As we always do, let's apply our special condition here. This discussion of guarantees and audit support is purely informational. It is not legal or tax advice, and it is not an endorsement of any specific add-on service. The decision of whether to purchase an additional audit defense product depends on an individual's personal comfort level and the complexity of their tax return. The purpose of these services is to assist you in navigating the IRS process. They do not and cannot guarantee any particular outcome of an audit. The result of any tax review will always depend on the facts, the law, and the supporting documentation you can provide. In summary, when evaluating tax software, look closely at the details of the accuracy guarantee. Understand that it protects you from the software's calculation errors, not your own data entry mistakes. Then, consider the levels of audit support offered. Is basic guidance enough for your peace of mind? Or would the option of full representation in the event of an audit be a worthwhile investment for you? These features don't just help you prepare your taxes. They provide a safety net for the road ahead. This chapter concludes our initial exploration of the top features. In our final chapter of this series, we will look at a feature that ties everything together and makes the entire process faster and more efficient. Seamless integration and data import capabilities. Thank you for your time. Hello and welcome back. We have now arrived at the fifth and final key feature in our series: seamless integration and data import capabilities. In many ways, this feature is what makes modern tax software feel truly modern. It's about efficiency, accuracy, and leveraging technology to eliminate some of the most tedious and error-prone aspects of tax preparation. This capability allows the software to securely connect with your financial life, pulling in the necessary data automatically. So, what exactly do we mean by data import? In the past, preparing your taxes meant gathering a stack of physical documents, your W-2 from your employer, 1099 forms from your bank or investment broker, and manually typing every single number from those papers into the software. Data import changes that entirely. Reputable tax software can now partner directly with thousands of employers, payroll providers, and financial institutions. With your explicit permission, the software can establish a secure, one-time connection and pull the numbers from your tax forms directly into the correct fields on your return. The most common and impactful use of this feature is with the Form W-2, the wage and tax statement you receive from your employer. Instead of typing in the 15 or 20 different boxes of information, you can often just enter your employer's identification number, or EIN, and a few other details from the form. The software then connects to the payroll provider and imports all the data in a matter of seconds. This not only saves a significant amount of time, but more importantly, it drastically reduces the chance of a typo. Transposing two numbers or putting a decimal in the wrong place is an easy mistake to make, and it's one that can cause major headaches and delays. Automated import eliminates that risk. This capability extends far beyond just W-2s.
Disclaimer: this video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.
Many people receive various types of 1099 forms. For instance, a Form 1099 INT reports interest income you earned from a savings account. A 1099 DIV reports dividends from investments. For those who are self-employed, a 1099 NEC reports non-employee compensation. Many banks and financial institutions now support direct import for these forms as well. Where this feature becomes a true game changer is for individuals with investment income, which is reported on Form 1099-B. This form can sometimes be dozens of pages long, detailing every single stock, bond, or mutual fund transaction you made throughout the year. Manually entering this amount of data would be an incredibly daunting task. The ability to import it directly from your brokerage firm is not just a convenience. For many, it's an absolute necessity. Now, whenever we talk about connecting financial accounts and transferring personal data, the conversation must turn to security. This is, without a doubt, the most important aspect of the data import feature. Reputable tax software companies invest heavily in state-of-the-art security measures. When the software connects to your employer or bank, it does so through encrypted channels, similar to the technology your bank uses for its own website and mobile app. Your login credentials for that financial institution are typically not stored by the tax software. They are used once, with your permission, to facilitate the data transfer and are then discarded. Furthermore, these companies have robust internal security protocols to protect the data that is stored within your tax return itself. This includes multi-factor authentication to protect your account from unauthorized access, as well as encryption for your data both when it's being transmitted and when it's being stored on their servers. As we always do, let's address our special condition. This explanation of data import and security is for informational purposes. It is not a blanket endorsement of the security of every platform. It is always the user's responsibility to practice good digital hygiene. Use strong, unique passwords for your tax software account, enable multi-factor authentication, and be wary of phishing emails pretending to be from your tax provider or the IRS. The convenience of data import is powerful, but it must be paired with user vigilance. In summary, the ability to seamlessly import data is a cornerstone of modern tax preparation. It represents a significant leap forward in both efficiency and accuracy. It transforms the initial phase of tax prep from a laborious data entry chore into a simple process of verification. By letting the software handle the transfer of numbers, you can focus your attention on reviewing the information and answering the higher-level questions about your financial life. This feature, combined with a guided interface, comprehensive form support, deduction and credit maximization, and a strong accuracy guarantee, forms the complete toolkit of a powerful, modern tax software solution. Thank you for joining me for this chapter. In our next segment, we will begin to bring all these concepts together. Hello and welcome. In our first 6 chapters, we established the 5 foundational features of modern tax software: a guided interface, comprehensive form support, deduction and credit maximization, accuracy guarantees, and seamless data import. Now that you understand what these features are, we can address a very practical question you'll face when you go to start your return. Which version of the software do I need? Most major tax software providers offer their products in several different tiers, commonly labeled as free, deluxe, and premium, or self-employed. This isn't just a pricing strategy. It's a way of aligning the software's capabilities with the complexity of a user's tax situation. Choosing the right tier is crucial. Paying for a version with features you don't need is inefficient, but choosing a version that's too basic can leave you unable to complete your return accurately. In this chapter, we'll break down what each tier is typically designed for. Let's start with the free version. As the name implies, this tier is offered at no cost for your federal return, though there might be a fee for a state return. The free version is specifically designed for individuals with very simple tax situations. Who does this usually include? Think of a student with their first part-time job, or a single individual who only has income from one employer reported on a W-2. These filers typically take the standard deduction and don't have additional financial complexities like investments or dependents. The free versions handle the standard Form 1040 and can often handle claims for a few common credits, like the Earned Income Tax Credit. The key takeaway is that simple is the operative word. The next step up is typically called the deluxe version. This is often the most popular tier because it's designed for taxpayers whose lives have a bit more complexity. This is the version people often need once they become homeowners, as it includes the forms required to deduct mortgage interest and property taxes, which are reported on a Schedule A for itemized deductions. The deluxe tier is also generally required if you want to itemize deductions for other reasons, such as for significant charitable contributions or medical expenses. It also tends to support a wider range of income forms and deductions, such as those for health savings accounts, HSAs, or student loan interest. If your financial picture involves more than just a simple W-2, but you don't have business or rental income, this tier is often the appropriate choice. Finally, we have the premium or self-employed version. This is the most comprehensive, and therefore the highest priced tier. This version is built for individuals with the most complex tax situations. This is the necessary choice if you are a freelancer, an independent contractor, or a small business owner who needs to file a Schedule C to report your business profit or loss. It includes specialized guidance for identifying business expenses, calculating self-employment tax, and handling vehicle deductions. The premium tier is also essential for people with significant investment activity. If you sold stocks, bonds, or mutual funds, you need to file a Schedule D for capital gains and losses. This version provides the robust support needed for that, including the data import features for investment transactions we discussed in Chapter 6. Similarly, if you own a rental property and need to report rental income and expenses on a Schedule E, the premium version is the one that contains the necessary forms and guidance for that situation. Now, it is very important that we apply our special condition here. This breakdown is a general guide to how these products are structured. It is not financial advice or a recommendation for which product you should purchase. The way to determine the right version for you is not by looking at the price, but by reviewing your own life and financial activities from the past year. Before you start, ask yourself a few questions. Did I only have W-2 income? Did I buy a house? Did I sell any investments? Did I do any freelance work? Your answers to these questions will point you toward the tier that supports the forms and situations relevant to you. Most software platforms are also very good at guiding you. You can often start with the free version, and as you go through the interview process, if you answer yes to a question that requires a higher tier version, for example, did you have self-employment income? The software will prompt you to upgrade at that point. This ensures you only pay for the features you actually use. In summary, understanding these software tiers is about matching the tool to the task. A simple return can be handled by a free version. A more detailed return with itemized deductions often needs a deluxe version, and complex situations involving business, rental, or investment income will require a premium version. Thank you for listening. In our next chapter, we will begin to look at some specific tax situations and how software handles them. Hello and welcome. In our previous chapter, we looked at how tax software is packaged into different versions. We mentioned that the premium tiers are often designed for the self-employed. Today we're going to dive deep into that topic. The rise of the gig economy and freelance work has fundamentally changed the American workforce. Millions of people are now their own boss, working as writers, rideshare drivers, consultants, or online sellers. This independence offers incredible freedom, but it also comes with unique tax responsibilities. In this chapter, we'll explore how tax software serves as an indispensable tool for freelancers and gig workers. When you work for an employer, they handle withholding your taxes from each paycheck. When you work for yourself, you are responsible for the entire process. This is the single biggest shift in financial management for a new freelancer. Your income isn't reported on a W-2. Instead, you might receive forms like a 1099 NEC for non-employee compensation, or a 1099K from a third-party payment network like a rideshare app or an online marketplace. The first and most crucial function of tax software for a freelancer is to help you correctly report this income and calculate your net earnings. This is primarily done on a form called Schedule C, Profit or Loss from Business. The software's guided interview will ask if you have self-employment income. When you say yes, it will open the door to the Schedule C section. Here, you'll be prompted to enter all the income you received from your freelance work, whether it was reported on a 1099 or not. It's important to remember that all income is generally required to be reported, even if you don't receive a form for it. After you've entered your income, the software's next job is to help you identify your business expenses. As a self-employed individual, you are generally able to deduct the ordinary and necessary costs of running your business. This is where the software becomes a powerful organizational tool. Instead of just giving you a blank box for expenses, it will walk you through dozens of common categories. It will ask about advertising costs, software subscriptions, office supplies, business-related travel, and professional development fees. For a rideshare driver, it will have a dedicated section for car expenses, helping you choose between deducting the actual costs of gas and maintenance or using the standard mileage rate. This categorical prompting is invaluable. It helps you remember and properly classify expenses you might have otherwise forgotten, ensuring you create an accurate picture of your business's profitability. For example, it might ask about the portion of your cell phone or internet bill that you use for business, a commonly overlooked deduction. Once your income and expenses are entered, the software calculates your net profit. This number is then used to figure out one of the most important obligations for a freelancer: self-employment tax. This tax covers your contributions to Social Security and Medicare. A regular employee and their employer split this tax, but a self-employed person is responsible for both halves. Tax software calculates this for you automatically on a form called Schedule SE. It also correctly calculates an important related deduction: the ability to deduct 1/2 of your self-employment tax from your income. Let's take a moment to apply our special condition. We are discussing the features and processes within the software. This is not business or tax advice. The software provides categories for common expenses, but it does not know if your specific expense is legally deductible. That determination is based on the facts and circumstances of your business. The responsibility to claim only legitimate business expenses and to keep accurate records, like receipts and mileage logs, always rests with you, the taxpayer. The software is your calculator and organizer, not your accountant. Perhaps one of the most helpful features for freelancers in premium software is guidance on quarterly estimated taxes. Because taxes aren't being withheld from your pay, the IRS generally requires self-employed individuals who expect to owe more than a certain amount to pay their taxes in 4 installments throughout the year. This avoids a massive tax bill in April and potential underpayment penalties. The software can take your completed return from 1 year and use that information to project your estimated tax liability for the next year. It will then calculate the suggested payment amounts and provide you with the due dates and printable payment vouchers, known as Form 1040-ES. This feature is a crucial financial planning tool for any serious freelancer. In summary, tax software designed for the self-employed goes far beyond basic tax filing. It acts as a guide for Schedule C, a checklist for business expenses, a calculator for self-employment tax, and a planner for quarterly payments. For the millions of Americans navigating the exciting world of self-employment, it is an essential piece of their business toolkit. Thank you for listening. In our next chapter, we'll shift our focus to another increasingly common and complex area: how tax software handles investment income and cryptocurrency. Hello and welcome back. In our last chapter, we explored the world of freelancing and how specialized tax software helps manage the unique responsibilities of being self-employed. Today, we turn our attention to another area of modern finance that can seem equally complex: reporting income from investments and digital assets like cryptocurrency. For a long time, this was a domain that felt reserved for professional accountants, but thanks to the power of tax software, it is now more accessible than ever. Let's begin with traditional investments such as stocks, bonds, and mutual funds. When you own these assets, you can earn money in 2 primary ways: through distributions like dividends and interest, and through capital gains when you sell an asset for more than you paid for it. This information is reported to you on a few key forms. A Form 1099 INT shows interest income, and a Form 1099 DIV shows dividend income. These are relatively straightforward, and the software will have dedicated spots to enter this information. The real challenge for investors comes with Form 1099-B, which reports the proceeds from broker transactions. If you are an active trader, this form can be incredibly long, listing every single sale you made during the year. For each sale, you need to report the proceeds, the date you sold it, the date you acquired it, and crucially, your cost basis, which is essentially what you originally paid for the asset. The difference between your proceeds and your cost basis determines your capital gain or capital loss. This is where the data import feature we've discussed before becomes absolutely essential. Manually typing in hundreds of transactions from a 1099-B is not only tedious but is also a recipe for errors. Top-tier tax software allows you to connect directly with your brokerage firm. With your permission, it will import the entire 1099-B electronically. The software then automatically processes all of this data, using it to populate a form called Form 8949, which details each individual sale. The totals from Form 8949 are then summarized on Schedule D, the form for capital gains and losses. The software handles all these calculations, including separating your transactions into short-term gains, for assets held a year or less, and long-term gains, for assets held longer than a year. Now let's venture into a newer and often more confusing asset class: cryptocurrency. The world of digital assets is evolving rapidly, and tax rules are evolving with it. For tax purposes in the United States, the IRS generally treats cryptocurrency not as currency, but as property. This is a critical distinction. It means that, like a stock, crypto is a capital asset, and you have a potential capital gain or loss whenever you dispose of it. A disposition doesn't just mean selling it for US dollars. It can also include trading one cryptocurrency for another, or even using cryptocurrency to buy a product or service. Each of these can be a taxable event. As you can imagine, tracking the cost basis and the fair market value for every single crypto transaction can be extraordinarily complex. This is another area where technology comes to the rescue. Leading tax software programs now have dedicated sections for cryptocurrency. They allow you to import your transaction history from major crypto exchanges, often by uploading a standardized file, or by connecting via a secure programming interface, known as an API. Once you import this data, the software gets to work. It sifts through your entire transaction history, buys, sells, and trades, to calculate the capital gain or loss for each event. It then populates the same forms used for stocks, Form 8949 and Schedule D, with your crypto transaction data. This automated process takes what would be a monumental research and calculation task, and condenses it into a manageable workflow. Here, our special condition is more important than ever. This chapter is an explanation of the functionality of tax software as a calculation and organizational tool. It is not investment advice, nor is it definitive tax advice. The tax implications of cryptocurrency are complex and can be affected by many factors. The software's calculations are entirely dependent on the completeness and accuracy of the transaction data you provide. The responsibility for keeping good records and for understanding the nature of your transactions remains with you. The software is a powerful assistant, but it is not a substitute for professional counsel if you have a complex investment situation. In summary, whether you're dealing with a portfolio of stocks and bonds or navigating the new frontier of digital assets, tax software is the key to taming the complexity. It automates the tedious work of data import and calculation, organizes the information onto the proper IRS forms, and allows you to file a comprehensive and accurate return, turning a once overwhelming task into a structured, step-by-step process. Hello and welcome back. In our last two chapters, we explored the specific tax landscapes for freelancers and investors. Today, we turn our attention to a topic that affects millions of Americans: family. Raising a family comes with immense rewards and significant financial responsibilities. In recognition of this, the U.S. tax code includes several important provisions, primarily in the form of tax credits, designed to provide financial relief to households with children and dependents. Navigating the rules for these benefits can be complex, but this is another area where tax software shines, acting as a clear and patient guide. The cornerstone of family tax benefits is the child tax credit. As we discussed in a previous chapter, a tax credit is a powerful tool that directly reduces the amount of tax you owe. The child tax credit is specifically for taxpayers with qualifying children. Now, the term qualifying child has a very specific, multi-part definition according to the IRS, involving rules about age, relationship, residency, and support. This is the first place where tax software simplifies things. Instead of asking you to read and interpret these complex rules, the software's interview process will ask you a series of simple questions about each dependent you have. It will ask for their name, date of birth, and their relationship to you. It will ask if they lived with you for more than half the year. It will ask if they provided more than half of their own financial support. Based on your straightforward answers to these questions, the software automatically determines if your child meets the criteria. If they do, and your income falls within the eligible range, the software will calculate the credit and apply it to your return. Next, let's discuss the Child and Dependent Care Credit. This is another valuable credit, but it's designed for a different purpose. It's not just for having a child. It's to help offset the cost of paying for care for a child or dependent so that you can work or actively look for work. This is for expenses like daycare, after-school programs, or a babysitter. Again, the eligibility rules can be intricate. The software navigates this by asking targeted questions. It will ask if you paid for care for a qualifying individual. It will then ask for the details of the care provider, their name, address, and their taxpayer identification number. This is a crucial requirement for claiming the credit. You'll also be asked about the total amount you paid for care. The software takes this information, along with your income, and calculates the exact amount of the credit you are eligible for, applying the correct percentage based on your income level. It takes a confusing calculation and makes it a simple matter of data entry. Another important aspect for many families, particularly single-parent households, is determining the correct filing status. While single is a common status, many parents may qualify for the more advantageous head of household status. This status typically offers a higher standard deduction and more favorable tax brackets than filing as single. To qualify, you generally must be unmarried, pay for more than half of the household expenses, and have a qualifying child or dependent living with you for more than half the year. The software helps you determine your eligibility by asking specific questions about your marital status at the end of the year. Who lives in your home, and who pays the bills? Based on your answers, it will recommend the most beneficial filing status for which you legally qualify. Let's pause to apply our special condition. We are describing the process that tax software uses to help you identify potential eligibility for these common family-related tax benefits. This is not tax advice. The software's determination is based entirely on the accuracy of the information you provide. It does not know the specific details of your family life beyond the answers you give. The responsibility to be truthful and to have records that support your claims, such as proof of expenses for dependent care, always lies with the taxpayer. In summary, tax software acts as a vital organizer and calculator for family finances at tax time. It translates complex IRS rules about dependents, childcare costs, and filing status into a series of simple questions about your life. This process ensures that families can accurately access the credits and benefits they are entitled to, providing crucial support without requiring them to become tax law experts. Thank you for listening. In our next chapter, we'll discuss another common life event with tax implications: education expenses and how software helps you claim education credits. Hello and welcome back. In our previous chapter, we focused on tax situations common to families with young children. Today, we'll follow that natural progression and discuss another significant financial milestone for many individuals and families: paying for higher education. The costs associated with college, university, or even vocational training can be substantial. To help offset this burden, the U.S. tax code offers several valuable benefits. However, the rules surrounding them can be complex, with different credits designed for different situations. This is where tax software becomes an essential guide, helping you navigate the options and accurately report your expenses. The two primary tax benefits for education expenses are the American Opportunity Tax Credit, AOTC, and the Lifetime Learning Credit, LLC. While both are designed to help with the cost of higher education, they have different eligibility rules. The American Opportunity Tax Credit is a powerful credit specifically targeted at the first 4 years of post-secondary education. Think of it as being for undergraduate studies. It is a credit of up to $2,500 per eligible student, and a portion of it is even refundable, meaning you could get some of it back even if you don't owe any tax. The Lifetime Learning Credit is broader. As its name suggests, it's not limited to just the first 4 years of college. It can be used for undergraduate, graduate, and even professional degree courses, including classes taken to acquire or improve job skills. The LLC is a non-refundable credit, meaning it can reduce your tax liability to zero, but you can't get any of it back as a refund. You can claim up to $2,000 per tax return. Now, a key rule is that you cannot claim both credits for the same student in the same year. This creates a critical choice, and this is where the software's intelligence comes into play. You don't have to become an expert on the nuances between the AOEC and the LLC. The software's guided interview process will ask you a series of questions about the student and the expenses. It will ask for the student's name, the school they attended, and whether they have completed 4 years of college yet. It will ask if the student was enrolled at least half-time in a program leading to a degree or credential. The information about the school and the amount of qualified expenses paid often comes from a form called 1098-T, tuition statement, which the educational institution provides. The software will have a specific section for you to enter the information from this form. Based on your answers to all these questions and the data from the 1098-T, the software will determine which credit you are eligible for and which one provides a better tax outcome for you. It automates this complex decision-making process. Another significant educational expense for many Americans is student loan interest. There is a tax deduction for the interest you pay on a qualified student loan. This is what's known as an above-the-line deduction, which means you can take it even if you don't itemize your deductions. If you paid $600 or more in interest during the year, your loan servicer will send you a Form 1098-E, student loan interest statement. The tax software will prompt you for this, asking if you paid any student loan interest. You simply enter the amount from the form, and the software will apply the deduction to your return, up to the legal limit. Let's be sure to apply our special condition. We are describing the tax benefits that exist in the tax code, and the functionality of the software that helps you claim them. This is not educational or financial advice. The software's calculations are entirely dependent on the information you provide. The responsibility for ensuring you meet all the eligibility requirements and have the necessary records, like receipts for qualified expenses not listed on the 1098-T, rests with you. In summary, paying for higher education is a major investment. Tax software plays a crucial role by demystifying the associated tax benefits. It helps you navigate the choice between different credits, correctly applies the complex eligibility and income rules, and ensures you can accurately claim the deductions and credits for which you and your family qualify. It turns a confusing set of rules into a simple, guided process. Thank you for listening. In our next chapter, we will discuss another common and significant financial event: buying a home. Hello and welcome. Over the last several chapters, we've explored how tax software assists with major life events and financial situations, from starting a family to paying for education. Today, we're going to discuss one of the most significant financial milestones for many Americans: buying a home. Homeownership is a cornerstone of the American dream, and the U.S. tax code contains several provisions that can make it more financially manageable. We will explore how tax software helps homeowners navigate these important deductions and credits. The first and most important concept to understand is the difference between the standard deduction and itemizing deductions. We've touched on this before, but it's central to the financial benefits of homeownership. The standard deduction is a fixed dollar amount that anyone can subtract from their income. However, if your individual deductible expenses add up to more than that standard amount, you can choose to itemize them on a form called Schedule A. For many people, the costs associated with owning a home are what make itemizing worthwhile. The largest of these deductions is typically the home mortgage interest deduction. For most of the life of a home loan, the majority of your monthly payment goes toward interest, not the principal loan amount. The tax code allows you to deduct the interest you pay on your mortgage for your main home and a second home, up to certain limits. Your mortgage lender will send you a form each year called Form 1098, Mortgage Interest Statement. This form clearly states the total amount of interest you paid for the year. The tax software makes this incredibly simple. In the deductions section, it will ask, "Did you pay any home mortgage interest?" When you say yes, it will present you with a screen that looks just like the Form 1098 you have in your hand. You simply transfer the numbers from the boxes on the form into the corresponding boxes in the software. It takes all the guesswork out of where to put the information and handles the calculations for you. The second major deduction for homeowners is for state and local taxes, which primarily includes your property taxes. This deduction is currently capped at a combined total of $10,000 per household per year. Your local government or your mortgage lender will have a record of the property taxes you paid. The software will have a specific section for this, guiding you to enter the correct amount. As you enter your mortgage interest and property taxes, the software keeps a running total of your itemized deductions and automatically compares it to your standard deduction, ensuring you choose the option that saves you the most money. Beyond these major deductions, tax software can also help you identify relevant tax credits. In recent years, there have been significant tax credits available for making your home more energy efficient. These are known as home energy credits. If you install new, high-efficiency windows, doors, insulation, or even a new heating and cooling system, you may be eligible for a credit. There are also separate, often larger, credits for installing clean energy property, such as solar panels or geothermal heat pumps. The rules for these credits can be very specific about what types of equipment qualify and how much you can claim. The software helps by asking you direct questions. Did you install any energy-efficient home improvements? If you answer yes, it will provide you with a checklist of common qualifying items. You can select the improvements you made, enter the cost, and the software will calculate the credit you are eligible for.
Disclaimer: this video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The creator of this video or the channel will not be held liable for any actions taken based on the information provided.
And fill out the required form, which is typically Form 5695. As always, we must apply our special condition. We are describing the functions of the software that help organize and calculate these widely known homeowner tax benefits. This is not real estate or financial advice. The software's calculations are only as good as the numbers you enter. The responsibility for keeping good records, such as your Form 1098, property tax bills, and receipts for home improvements, rests entirely with you, the taxpayer. In summary, tax software is a vital tool for homeowners. It demystifies the process of itemizing deductions, simplifies the entry of mortgage interest and property tax data, and actively helps you identify valuable credits for making your home more energy efficient. It takes the complexities of the tax code and turns them into a clear, manageable process. Thank you for listening. In our next chapter, we'll look further into the future and discuss how tax software handles retirement savings and distributions. Hello and welcome. In our journey so far, we've covered how tax software assists with many of life's major financial chapters, from family and education to homeownership. Today, we look toward the horizon at one of the most important financial goals for many Americans: retirement. Saving for retirement involves a long-term strategy, and the tax code is designed to encourage that saving through various tax-advantaged accounts. In this chapter, we'll explore how tax software helps you navigate both the saving and the spending phases of your retirement journey. Let's first talk about the contributions side of the equation. The money you put away for the future. The two most common types of personal retirement accounts are the traditional IRA and the Roth IRA. Employer-sponsored plans like a 401k are also incredibly common. For a traditional 401k, the process is largely automated. Your contributions are taken out of your paycheck before taxes are calculated. This means your taxable income, as reported on your W-2 form, has already been lowered by the amount you contributed. When you import or enter your W-2 data into the tax software, this benefit is already accounted for. You don't need to do anything extra. The software will see the codes in box 12 of your W-2 and understand what they mean. For a traditional IRA, the process is more hands-on, and the software's guidance is crucial. Contributions to a traditional IRA can be tax-deductible, which lowers your taxable income for the year. The software will directly ask you, did you contribute to a traditional IRA? If you say yes, it will ask for the amount you contributed. Then it performs a complex but vital task in the background. It checks your income and asks whether you were covered by a retirement plan at work. Based on IRS rules, these factors determine if your contribution is fully deductible, partially deductible, or not deductible at all. The software handles this entire calculation, ensuring you get the correct deduction you are legally entitled to. It's also worth briefly mentioning the Roth IRA. Contributions to a Roth IRA are made with after-tax money, meaning you do not get an upfront deduction. Therefore, when you tell the software you contributed to a Roth, its primary role is for record-keeping, not for calculating a deduction on your current year return. Now let's fast forward and look at the distributions side. When you start taking money out of these accounts in retirement, this income is generally taxable and is reported to you on a form called 1099-R. The tax software will have a dedicated section for you to enter the information from this form, box by box. One of the most important pieces of information is in box 7, which contains a distribution code. This code tells the IRS the reason for the withdrawal. The software uses this code to determine how to treat the income. For example, a code for a normal distribution for someone over age 59 and a half is handled differently than a code for an early withdrawal. This is particularly important when it comes to early withdrawals. Generally, if you take money out of a traditional retirement account before age 59 and a half, you may have to pay your regular income tax on the money plus an additional 10% tax. However, there are several exceptions to this rule. The software is programmed to help you identify them. It will ask a series of questions to see if the withdrawal was used for a qualified reason, such as a first-time home purchase, certain medical or education expenses, or due to a disability. If your situation meets one of these exceptions, the software will help you fill out the necessary form, Form 5329, to correctly report the exception and avoid the additional tax. As always, let's address our special condition. This chapter is about the software's functionality as a reporting and calculation tool for retirement accounts. It is absolutely not retirement planning or investment advice. We are not recommending any type of account or suggesting when or how you should save or withdraw your money. Those are deeply personal financial decisions. The software's role is to ensure that, whatever actions you have taken, they are reported accurately and in accordance with tax law based on the information you provide. In summary, tax software is a crucial partner for your long-term financial health. On the front end, it helps ensure you receive the proper tax deductions for saving. On the back end, it provides a clear, guided path for reporting your retirement income and navigating the complex rules around distributions. It simplifies both sides of the retirement tax coin. Thank you for listening. In our next chapter, we'll pivot to a very practical topic: common mistakes people make when using tax software and how to avoid them. Hello and welcome. Over the course of this series, we have explored the powerful features of tax preparation software and how they can be applied to a wide range of life events. We've seen that the software is a remarkable tool, but like any tool, its effectiveness depends on the person using it. In this chapter, we're going to shift our focus to the user, that's you, and discuss some of the most common and most avoidable mistakes people make when preparing their own taxes with software. The goal here isn't to cause alarm, but to empower you with awareness. A few extra minutes of care and attention can save you from potential headaches, delays, and correspondence with the IRS down the road. The first and most frequent mistake is the simple typo or data entry error. Software can't tell the difference between an accidental keystroke and a correct number. This is especially critical when it comes to identity and financial information. A single mistyped digit in a social security number can cause the IRS to reject your entire e-filed return because the name and number won't match their records. Similarly, an incorrect digit in your bank's routing number or your account number can cause your direct deposit refund to be delayed, rejected, or in a worst-case scenario, sent to the wrong account. The solution is simple: slow down and double-check. Before you hit submit, go back and review every number you typed in manually. Read your social security number and bank account information back to yourself, digit by digit, directly from the source card or check. It's a small step that prevents a big problem. The second common misstep is choosing the wrong filing status. As we discussed in a previous chapter, your filing status, whether it's single, head of household, or married filing jointly, has a major impact on your standard deduction and tax rates. While the software does an excellent job of asking questions to guide you to the correct status, it's possible to misinterpret a question. For example, the rules for head of household can be complex, involving who lived in the home and who paid for more than half of the household expenses. If you're not entirely sure, it's easy to make an incorrect selection. To avoid this, use the built-in help resources. Nearly every question in the software has a Learn More link or a small question mark icon next to it. If you have any doubt about a term, click that link. It will provide you with a plain language definition based on IRS guidelines. Taking 30 seconds to confirm the definition of a qualifying child or household expenses ensures you're making the correct choice. Our third mistake is forgetting to report all sources of income. In the hustle of tax season, it's easy to focus on your main W-2 from your primary job and forget about the smaller income streams. Did you earn a few dollars of interest from your savings account? That income is reported on a Form 1099 INT. Did you do a small freelance project? You may have received a 1099 NEC. Did you sell some stock? That's on a 1099-B. Even if you don't receive a form, for instance for a small cash-paying side job, that income is generally still reportable. The IRS receives copies of most of these forms, and their automated systems are very good at matching that information to what you report on your return. The best way to prevent this is with good organization. Before you even open the software, create a dedicated folder throughout the year for tax documents. As they arrive in the mail or your email inbox, put them in that folder. When you're ready to file, you'll have everything in one place, reducing the chance that you'll overlook a source of income. Finally, the last common mistake is failing to review the final return. After you've answered the last question and the software shows you a summary with your final refund or amount due, the temptation is to click File and be done. Resist that urge. Remember, you are legally responsible for the accuracy of every number on your tax return. Before you submit, every tax program allows you to view or download a PDF of the actual tax forms. Take a few minutes to do this. You don't need to be a tax expert to do a common sense review. Look at the total income on Form 1040. Does that number seem reasonable based on what you know you earned? Look at the summary of your deductions. Do they reflect the information you entered? This final check is your last line of defense to catch a typo or a missed form. In summary, using tax software effectively is about being a careful and engaged participant in the process. By avoiding simple data entry errors, confirming your understanding of key terms, being thorough with your income reporting, and performing a final review, you can use these powerful tools with confidence. Thank you for listening. In our final chapter, we'll wrap up our series and discuss what happens next. What to do after you've filed. Hello and welcome to the final chapter of our series. For the past 14 chapters, we have journeyed together through the landscape of modern tax preparation software. We started by identifying the 5 most critical features, from a guided interface to seamless data import. We then explored how to choose the right software tier, and how these powerful tools handle a vast array of life events, from freelancing and investing to starting a family, buying a home, and planning for retirement. We've also discussed how to use the software wisely and avoid common mistakes. Today we arrive at the end of the road. What happens after you've taken a deep breath and hit that submit button? The work may be done, but the journey isn't quite over. In this concluding chapter, we'll cover the essential post-filing steps that will bring your tax season to a successful and organized close. The first thing that happens after you e-file is a quick, automated check by the IRS. Within 24 to 48 hours, you should receive an email or a notification in your software confirming that your return has been either accepted or rejected. A rejection is usually due to a simple error, like a typo in a social security number, which you can correct and resubmit. An acceptance means the IRS has your return and has begun processing it. Once your return is accepted, the most common question is, "Where's my refund?" The most reliable and secure way to get an answer is by using the official "Where's my refund?" tool on the IRS website, irs.gov. You'll need your social security number, your filing status, and the exact amount of your expected refund to log in. This tool will show you the status of your return as it moves through 3 stages: return received, refund approved, and refund sent. While the IRS issues most refunds in less than 21 days, it's best to be patient as timelines can vary. The next crucial step, and one that is often overlooked, is proper record keeping. Your tax journey for the year isn't truly complete until you've saved all your documents. First and foremost, save a final copy of your actual tax return. Your software will provide this as a PDF. Save it to a secure folder on your computer, and consider backing it up to a cloud storage service or a separate hard drive. Some people also prefer to print a physical copy for their files. In addition to the return itself, you must keep all the supporting documents you used to prepare it. This includes your W-2s, all your 1099 forms, your Form 1098 for mortgage interest, and any statements from your bank or brokerage. It also includes the records that don't come on an official form, like receipts for charitable donations, records of business expenses, or a mileage log if you deducted car expenses. The general recommendation is to keep these records for at least 3 years from the date you filed your return, as that is the typical window during which the IRS can initiate a review. But what happens if you realize you made a mistake after you've already filed? Perhaps a corrected 1099 form arrives in the mail, or you discover a deduction you forgot to take. There is a clear process for this. Filing an amended tax return using Form 1040X. This might sound intimidating, but your tax software can help. Most high-quality programs have a feature that allows you to start an amended return. It will import the data from your original filing, and then guide you through the process of making the necessary changes, and explaining the reason for the correction. As we conclude, let's apply our special condition one last time. This information about tracking refunds, keeping records, and amending returns is procedural guidance. It is not tax or legal advice. The decision of whether you need to amend a return depends on your specific circumstances. The software is a tool that helps you fill out the form correctly once you've determined that an amendment is necessary. And with that, our series comes to a close. The central theme we've returned to time and again is one of empowerment. Tax software is more than just a calculator. It's an organizational partner and a guide. It translates the immense complexity of the U.S. tax code into a manageable, step-by-step process. It helps you find the deductions and credits you're entitled to, and it ensures your calculations are accurate. By being a careful, organized, and informed user, you can leverage this incredible technology to navigate your financial life with confidence. Thank you for joining me on this journey. I hope this series has left you with a clearer understanding of these powerful tools and the confidence to tackle your next tax season.
Disclaimer: this video is for informational and educational purposes only and should not be considered professional legal, financial, or tax advice. I am not a certified public accountant, CPA, or a tax attorney. You should consult with a qualified professional for advice tailored to your individual situation. Tax laws are complex and subject to change. The The creator of this video or the channel will not be held liable for any actions taken based on the information provided.